Moving on to Nigeria, that market, of course, bucking the trend there. Slightly lower, the NSE All Share Index closing at 33,355 points, 0.4% lower, mainly because of the losses we saw in Dangote Cement and, of course, some other high-cap companies. The market has been trending higher for the most part of this year. It's up just under 19% year to date, so some profit taking there, putting some pressure on the market. Let's cross now to Adegboyega Adebajo. He's head of structured finance and advisory at Diamond Bank. He's giving us a perspective on the market. Adegboyega, I know you're really bullish on the insurance sector, but let's first of all get your thoughts on the broader market trend these days.
It's interesting, 45 days into the year, we're almost at 19% year to date. I think it's a surge. And I think there'll be some corrections or adjustments as we move along over the next 90 days, perhaps. Most of what we see is positioning for corporate actions, which are expected due to the recent year end. Yeah. But at the same time, I feel there will be some profit taking as those opportunities emerge. And then we'll see the adjustments.
Of course, one new trend we're seeing is that investors are now pretty bullish about small to mid-cap companies. The insurance sector, of course, taking a lot of investments these days. And it's pretty interesting to note that yesterday, they actually led in terms of volumes traded. So clearly a paradigm shift, if you like.
Yeah, well, you will recall that I've been saying that that's a latent sector. It's a lot of potential. I dare use the word a gold mine for the right sort of investor. It's a sector that's full of inefficiencies. If you look at IEI's results announced yesterday, you'd see a pretty small dip in turnover, about 1.7%. You know, and when you go down to profit after tax, the dip there is much, much larger. It's about over 1,000% in terms of change from year on year. And that's even 2011 results that are just coming out in 2013. So there's lots of inefficiencies over there. It's still a pretty much underinsured economy that we have. Lots of opportunities. So once you get a good player who can apply insurance and understand the market and deploy, I think we'll see a change in that sector.
Of course, one thing we noted last year was that foreign investors are also becoming active in that space. Old Mutual from South Africa getting invested, I think it's in Oceanic Life. And yes. Your thoughts, in fact, maybe I should ask, what are you hearing in terms of M&A activities in that space right now?
Well, a lot of it is pretty much under the radar, still confidential at this stage. But I can tell you that there are discussions going on about business combinations. I am aware of a couple of insurance companies who've very quietly done some degree of recapitalization using private placements, the specific investor going in. But a lot of it will come out into the public space over the next 5-6 months.
And do you think that will be another catalyst for the rally we're seeing in the space? Because many will still argue that with many of them still trading closer to 50 kobo, they are still trading at distressed valuations. On the other hand, though, some people would suggest that it's probably just painting the reality. That market is really dominated by a few names.
Well, yes. You know, you want to start asking yourself, there are about 30 of them listed. And do we really need up to 30 insurance companies here? Remember when we had 89 banks in Nigeria? Yeah. We've got 25 now, and the banks are a lot more efficient. You know, perhaps it's the sort of thing we're going to see in the insurance sector, which in itself is a subsector of the financial services. Maybe that's the way to go. Maybe the combinations will reduce the number of players. The play gets a lot more intense, more sophisticated. And maybe those who have invested today in the insurance sector will start to reap rewards.
So for an investor that's willing to speculate, with the potential of M&A activities, the insurance space is the way to go right now?
Yeah. Well, I certainly will say so. But for any investor, you've got to really look at the books, look at the numbers. Right. If you want to take a position in a company that's perhaps weaker in terms of balance sheet size, but stronger in terms of brand and ability. And I would always separate the insurance companies into the old ones who've been around from the 60s and the 70s, and the newer ones that came into the market in the 80s and the 90s. And clearly the newer ones, you know, are a lot more sophisticated in their approach to the market, but the old ones have the sizable balance sheets for stability. So I think that's where the combinations are going to come into play. And where there's a foreign investor that can tap into the strength and the energy you have in the newer markets, I think you'll get a winning combination there.